Good afternoon, everybody, and welcome to our Brexit broadcast today. My name is Ian Moran. I'm the Group Customs and Trade Solutions Manager at EV Cargo, the new name for All Port Cargo Services. During this afternoon session, which will last about an hour, I'll run through the key changes clients need to be prepared for in the run-up to the end of the transition period and highlight some of the new aspects. I'll also walk you through the new arrangements for moving goods to and from the European Union. In addition to this recording, you'll have provided with a copy of the presentation, which will include some additional slides to cover the new arrangements and something you can refer to. And within the presentation, there'll be a number of links to government guidance, which will provide some more in-depth information and analysis. If you have any questions following this presentation, do contact us and we'll try our best to help you out. So where are we now? Well, here we are. We thought we'd have a deal by now, or at least know where we're going, but the politicians are still talking. We still have no more clear information about the future of the UK and its relationship with the EU from the 1st of January. However, it does seem that there is some traction and there are some decisions which have been made, and we possibly could be close to some sort of decision. So the solutions open to the government at the moment. One is the Canadian model, quite a bit talked about. This seems very, very doubtful indeed. The UK is quite keen to have something modelled on what the Canadians have, but the EU is very much against that, mainly due to the size and volume of trade between the EU and the UK and the proximity to the UK market. We quite often refer to no deal as the Australian model. It's code for no deal. Yep, this is a possibility. And if you listen to the press, this is what we're aiming for. And we're being told by the government to prepare for no deal, batten down the hatches, and at the end of the day, the country will come out of it well. I will be very, very surprised indeed if this happens, because of the implications of a no deal. If we do end up having a no deal on the 1st of January, we do believe there will be delays. There will be duty to pay on goods moving to the European Union and also goods coming from the European Union, which will have huge impacts on consumers because it will be consumers paying at the end of the day. It's got huge impact to our exporters because duty will be paid on our cars, much of our farm produce, and many other items we export to the EU, which will put UK industry at a disadvantage. And our industry too would have to collect this duty, and collecting duty would be a task that we're perhaps not as prepared for as we might be. And it will delay the movement of cargo because not everybody has a credit account or a duty deferment account. So a no deal does seem unusual, but it may well be that this will actually happen. And if it does, I hope the government actually provides a few months as a period to get ready for this decision. But time will tell. And of course, we've got this alternative model, which may possibly be agreed yet between the politicians. So the issues remain: fishing, level playing fields, governance in Northern Ireland. There has been some developments about Northern Ireland, which I'll come to later on in the presentation, which is good news because it does provide some respite for people trading between Great Britain and Northern Ireland. But still, there's a huge implications when it comes to trading with Northern Ireland for clients when it comes to the 1st of January. So one of the key issues of the new arrangements, and this is something we must bear in mind, is that irrespective of whether they have a deal or no deal, there will be customs declarations on the 1st of January, unless this is a postponed situation and we're given some months to prepare. So without a deal or with a deal, customs entries, and that's quite important to note. If you're importing and exporting to third countries, Australia, China, USA, etc., it's business as normal, and we'll be doing customs entries just as normal. So the export process for the European Union, for roll-on, roll-off cargo, that's cargo that's going to go through Dover, the Channel Tunnel using trailers. Customs declarations will need to be done ideally before the vehicle leaves your premises or before the goods leave your premises. So that's going to be quite important in terms of changes to the supply chain. That will give time for customs entry to be done, and the vehicle can go straight through customs without any issues. And what we don't want to happen is vehicles leaving the exporter's premises and then sort of having to hover around the short sea ports while someone puts a customs declaration in the customs system. So that's most important. As far as imports are concerned, there's two key solutions here. One is that you'll be able to do an entry, or we'll be able to do an entry following the working day of arrival of the goods in the UK. So hauliers will need to have importers' EORI numbers in good time before vehicles arrive at the port of departure, such as Calais. And then we would do a declaration within 1 working day of arrival of the goods in the UK. So that means that goods shouldn't be delayed coming to the UK. They can be delivered, and then the entry can be done in time afterwards. That is one solution. And if you're importing through the more traditional ports of Felixstowe, London Gateway, Southampton, etc., where there are port and inventory systems in place which control cargo, the entry will be done as it would be for deep sea cargo before the goods can be released from those ports. Usually goods going into Southampton, Felixstowe, London Gateway are in a container, so there's a little bit more time for the customs clearance process. Some people who have opted for customs freight simplified procedures will be able to bring their cargo in using EIDR procedures, that's entry and declarants records. Means that the transporter carrier just needs to have the EORI number of the actual importer, and then that would allow the goods to come into the country, and then a supplementary declaration will be done by the 4th working day of the following month. And that's a well-tried process for many of our clients. And those people who don't want to adopt the EIDR proposal, which requires them to have import information in their records, we can do a simple frontier declaration as normal, as though the goods are coming from China. Some people, but not that many, are adopting to postpone their customs declarations for imports, which is something that the government is allowing. This enables them to postpone their declarations for up to 6 months from the port, from the day the goods arrive. The arrangements here would be that carriers would provide their importer's EORI number at the port of loading, and that would enable them access to the country. And then a customs declaration would have to be done within 6 months. So if the goods are coming in January, the declaration would need to be done by June. And if the goods are coming in June, the declaration would have to be done by December 2021. It sounds really, really good. However, there are drawbacks. To get EIDR, you don't need to be approved, but to do the actual supplementary declaration, you do have to be approved. And it's quite a complex declaration process in terms of authorization with customs. And furthermore, when you're dealing with VAT, you do have to estimate your import VAT for every import, and that's got to be declared on your VAT return each periodic period when you're doing a VAT return, which can be quite onerous for many importers. So we're finding that most of our customers aren't adopting to actually delay the customs entry process. And if we do have a deal and there isn't any duty, obviously the actual cash flow implications are less attractive. So another thing which applies to all importers and exporters, and this isn't just those dealing with the European Union, and that's the new global customs tariff, which is going to be introduced on the 1st of January next year. This has been published. It is not finalised yet. We're expecting a further edition later on this month. At the moment, if you look at the actual website, it has an 8-digit tariff heading. This will be increased to 10 digits in line with the European customs tariff that we are used to now. And there are advantages of this new customs tariff. It does have some reduced rates of duty, although many duty rates remain the same, such as cars at 10% and garments at 12%. But there are many examples of goods which have got a lesser rate of duty. Now, the important thing about the new global tariff, it is, we're told it's going to come into play on the 1st of January, but this is a possible negotiating tool with the European Union. And if we do agree to having level playing fields, the EU will be very, very keen that the UK shares the same duty rates as the EU. So it would not surprise me at all. We have an announcement later on this month to say that we will stick with the EU duty rates and it'll be business as normal. But time will tell. But this will apply to both importers and exporters, whether you're dealing with the European Union or not. Another big change which will impact all clients, again, those involved with Europe and outside Europe, is VAT. So the UK government is moving from the current situation where VAT is payable on imports to a system called postponed VAT accounting. So at the moment, when we do a customs declaration, we work out the duty and the VAT, and the VAT is either charged due at imports or deferred against the deferment account, and that's due at the time the goods have imported. This is moving to postponed accounting, and clients can opt into this. It's not compulsory, but this will allow you to account for the VAT on your periodic VAT return, whether that's monthly or quarterly. So this presents quite a good cash flow advantage to importers. And one of the reasons this has been brought in, it saves the collection of VAT from importers without credit facilities for goods coming in from Europe. So it's a really good benefit there. Now, there are some things to bear in mind about postponed accounting. Now, to get your statements from the customs, at the moment you're used to getting a C79, which allows you to obviously sort of record the VAT you pay on imports and deal with it on your VAT return. This will be changing. So when you do opt for postponed accounting, you'll need to register with the Customs Declaration Service, CDS, and on the presentation it will be sending you, there will be a link to the actual website which has this detail on it. And you'll need to put down your company details, and you'll access your statements each month online from this website. Don't get confused with CDS being the new custom system. We'll still be using the old system, Chief, but this is the portal the government will be using, so you can obtain your VAT statements on a monthly basis. We'll also require you to drop us a line by email, just confirming that your organisation would like us to use postponed accounting, so we can code your customs declarations correctly. And we'll record that email on our records for future use. One thing to note is that VAT statements will only be online for 6 months. So when you do actually receive your statements from the government website, do remember to download them into your own system and keep them in a safe place. So VAT changes for Northern Ireland. Although Northern Ireland is going to be deemed to be part of the European customs area, the VAT arrangements remain generally unchanged in terms of Northern Ireland will remain part of the UK's VAT system. However, if you're delivering goods to Northern Ireland, instead of using a GB OIO number, which you would be expected to use given that customs declarations will be needed for goods moving to Northern Ireland, you'll use a new XI prefixed EORI number. So I'll come on to the Trader Support Service in detail in more time, but if you've actually enrolled for the Trader Support Service, you should have by now been given an XI EORI number. If you haven't received this yet and you're trade with Northern Ireland, you'll need to apply for one fairly urgently. So VAT will be continued to be accounted for in a normal way. So when we charge clients in Northern Ireland, you'll still charge them UK VAT as normal. But it's just when you're doing the customs declarations that you'll need to have an XI EORI number. Duty deferment is an area where you do certainly need to have a good grasp of the potential implications of leaving the European Union. So first of all, because VAT will go to a postponed arrangement, it will no longer be deferred against your duty deferment account if you opt to go for postponed accounting, which is good news because that is something that potentially you have a guarantee with your bank for, and of course the reduced guarantee will obviously help cash flows. A bank guarantee will of course still be required for duty for amounts over £10,000. There is an easement that's been brought in that allows traders with relatively small amounts of duty up to £10,000 not to have a guarantee. Anything above £10,000 will need to have a guarantee. But do be mindful of if we don't get a trade deal with the EU, there will be customs duty payable, and it's probably a good exercise to just look at the amount of duty your company could have to pay out on your acquisitions from the European Union member states, just to make sure that you do have a duty deferment account which can actually manage these costs, because it'll be a lot easier to manage the import goods with a duty account that has the capability of dealing with the amounts rather than having to rely on third parties to pay duty on your behalf. I should point out at this stage that even with a free trade deal, the free trade deal is only likely to apply to goods of EU origin. So if you're buying goods from France and the goods are made in France with a deal, the chances are there'll be no customs duty payable. So if you're buying the goods from a French supplier and they've in turn bought the goods from China, the goods may be of Chinese origin and therefore are likely still to be subject to EU duty. So furthermore, if your company's buying goods from Asia, from say China, for example, into the UK, paying EU or UK duty, and then you re-export those goods to France, again, customs in France will be charging duty on those goods, even with a free trade deal. So it's a big area to be mindful of, because we're very, very wary that many of our customers buy goods in from Asia and other countries around the world and then re-export them to EU member states. The UK government's been busy negotiating free trade deals with many countries around the world to replicate the agreements that the EU's been negotiating on our behalf for many, many years now. And the government's had a great deal amount of success here. Things started off quite slowly, but in recent years, and even in recent weeks, trade deals have been negotiated successfully with a number of member states. So many of the trade deals we've been enjoying up to now will continue. And likewise, the GSP system, generalized systems of preferences, that too is going to be basically sort of carried over into UK legislation. So anybody buying from countries where they are part of the GSP system is business as normal, and those rates of duty will be replicated in the new world next year. However, there are some easements which will be a benefit to traders. We won't be able to benefit from the VEX system, which is a VEX statement on invoices that many GSP countries are able to use now, which enables us to bring in goods without a certificate. However, the UK government, after the 1st of January, will allow invoice declarations to be put on invoices as an acceptable form of claiming preference, and also they will allow normal GSP certificates, in fact copy GSP certificates, to be provided on imports, which will allow us to claim reduced rates of duty. That's good news, because at the moment, if a GSP certificate is issued, we need to have the original document before we can actually claim that preference. One country I would particularly point out, which is of course of concern, and that's Turkey. Turkey is essentially part of the customs union of the European Union. And although the UK government is quite keen to negotiate a free trade deal with Turkey, it's also likely that if Turkey was to agree to that, they may fall into deep water with the European Union, where they have even a closer agreement than they would have with the UK. The European Union may not be too happy about Turkey having a unilateral agreement with us. So do bear in mind, at the moment, many goods coming from Turkey are brought in free of duty, and without a trade deal, it's almost certainly that those goods will be subject to customs duty in the new world. So those of you who import from Turkey on a regular basis, I know we have a lot of customers that do so, do be careful and do be prepared. And these are the countries where the UK has negotiated a preferential rate of duty or free trade agreements. On the left-hand side, we've recently added Egypt and Vietnam to that list, and Singapore. And those countries on the right-hand side, the UK government is still busy negotiating with to hopefully have some sort of replication of what we enjoy at the moment. Common transit's not an area which directly concerns clients. This is more for carriers, but it's more of a caution that we need to sort of mention to you, because many UK exports will be subject to these transit arrangements. And the reason why we use transit is when goods are moving around Europe and they are at risk from duty and VAT. So for example, if I'm shipping goods from Birmingham to Berlin, and they're British goods from the 1st of January, when those goods move from Dover en route to Berlin, no customs declaration has been done, and the goods are potentially subject to EU duty and VAT until they're actually customs cleared in Germany on arrival. So there's a requirement to complete a transit document, which is underpinned by a guarantee with customs, just to ensure that the carrier has that responsibility that should the goods be diverted and brought into free circulation within the European Union, prior to the customs entry being done, that someone's going to pick up the tab and pay for any duty and VAT costs. And this is a very common document used throughout Europe, and UK is going to continue with this transit arrangements. And many UK exports will be subject to these transit forms because the goods won't be cleared at Calais or Zeebrugge or wherever. They'll be cleared inland somewhere to a temporary storage facility or inland port. So many of our hauliers will be required to complete these transit declarations to guarantee duty. And our big concern is that a lot of hauliers don't have the means to have these guarantees with customs because, again, they have to go to the bank and the bank will make a fee to have these guarantees in place. So do check out when you're dealing with carriers to make sure that they have these arrangements in place in the new year so they can actually continue to transport goods from the UK to the EU. And likewise, from the EU to the UK, it's possible that many carriers will use transits. I know the EU customs authorities are very keen that hauliers use transits rather than using lots of customs declarations and entry company documents, as we call them, to provide evidence that the goods left the EU. But strictly speaking, there's no reason at all if you're moving goods from Berlin to the UK for the actual carriers make sure they have an entry accompanying document which doesn't need a guarantee. That's discharged though it's Calais to prove the goods have left the EU, and then the goods can come into the UK. And there's not a great need to use a transit document in the UK due to our easements at the moment until the 1st of July, when the regulations are tightened somewhat and we need to have more control of the imports coming to the UK. But do talk to your carriers about transit to make sure that they are prepared. I'll briefly mention the safety and security declarations. This is something not new to us because we do safety and security declarations already for goods moving from third countries such as the United States, Canada, Australia, China, and so on into the UK. These are done by the carriers and it's just part of the process nowadays. However, for Europe, these haven't been needed until recently. For UK exports going to the EU, these are part and parcel of the export declaration, so there's no extra work needed for exports, but for imports they will be needed. The UK government has delayed the requirement for safety and security declarations until July next year. However, we will need to do them for shipments going to Northern Ireland, and more about that later. But just bear in mind that for our exports going to EU member states, the carriers are responsible to do these declarations for goods going to EU member states. So this is why you may be being asked by carriers for some more information over and above what you're used to giving them, because they're just getting prepared to do these declarations. Another system that's been brought in to deal with the UK's departure from the European Union's customs arrangements is the Goods Vehicle Movement Service. This is going to be used in limited format for the first 6 months, primarily covering transit documents coming in from EU member states to the UK to control the physical, the transit element of the actual documents into the country. And we also need to use them for goods going to Northern Ireland in particular. And this is something that, again, you need to be mindful of, goods going from UK into Northern Ireland via the Republic of Ireland. And I should say that one of the requirements of the Northern Ireland Protocol is that goods which are going between the UK and Northern Ireland via the Republic, for example, via Liverpool and Dublin, will need a transit document. So if you're shipping to Northern Ireland with a carrier, do make sure that they have transit documents in place to actually cover the potential duty and VAT at risk as they transit to the Republic. And another system that's been much in the news, and many of us have heard about Operation Brock and the concern about queues on the M20 as traffic heads towards the Channel ports. So the government has brought in what they initially called it a smart freight, a very easy title to remember, to check an HGV is ready to cross the border service, which is a bit more of a mouthful. And this is to try to discourage hauliers from entering Kent until they have all their customs paperwork in place. So one of the big press stories has always been the queues at the ports with vehicles that have clogged up on the M20, M26 and M25 waiting to leave the country. Well, the government's answer to that is this system, which will require hauliers to register, and they'll have to put in the customs details into the system. And then once that's approved, they'll have what we call a Kent pass, which will enable them to enter Kent and then go to the ferry terminals without any further controls. And the penalty for failure to have this Kent pass will be a fine of up to £300, which will be quite a disincentive. And drivers will be stopped and expected to produce this pass. And also it's going to be policed by these number plate recognition cameras on motorways, which will spot drivers who don't actually have these documents, because one of the requirements of registering for the system is that you need to put your vehicle registration number into the system, so these the cameras will actually recognise who's able to enter Kent and who's not. So I think the consequences of this are those drivers that aren't prepared for their customs paperwork, instead of actually queuing up on the motorways, they'll probably be queuing up at motorway service stations in Watford Gap and Leicester Forest and other such places while they're waiting for their paperwork to be processed. But time will tell. But the good news is that hopefully the Kent roads won't be too busy. Those of you involved with importing food and exporting food, at the moment there's very few controls on what we import and export. So with the European Union, we can expect quite extensive controls moving forward. I know many of our clients are employing vets like there's no tomorrow. I don't know where these vets are coming from, but I suspect if you're a vet, you're very much in demand at the moment. Because they will be required to issue health certificates, particularly of goods of animal origin. And when we talk about animal origin, just bear in mind that does include milk products, eggs, etc., and honey as well, because that comes under those regulations too. So an awful lot more bureaucracy there for people moving food, and these extend to Northern Ireland too. So food traders moving goods to Northern Ireland are subject to these controls too, but more about that in a second when we cover Northern Ireland. So Northern Ireland has been a huge issue. We've been ready for EU exit for quite some, not ready, but we've been getting ready for EU exit for quite some years now, since 2016 when the referendum took place. But the Northern Ireland Protocol only really hit us fairly recently, early on this year. And we're finding that businesses are struggling with Northern Ireland and the requirements. The key thing to remember is that customs declarations will be required for goods going from GB mainland to Northern Ireland, not so much for goods coming from Northern Ireland to the GB. Luckily, the politicians have agreed some simplifications last week, which I'll come on to in a second. But all this is to allow the free movement of goods between Northern Ireland and the Republic and vice versa. And trade between Northern Ireland and the rest of the world will continue much as it is what it is today. But just remember that Northern Ireland will broadly remain in the customs union and have to follow single market rules of the EU moving forward, although they will still be part of the UK as we know it today. So many of you have heard of the internal market bill that's been going through Parliament. There has been some contentious items in that which have been negotiated away now last week. So the bill is still going through, and it was discussed in the House of Lords as possibly, I think, as recently as today. And because the government has recognised that our industry, the freight forwarding industry, hasn't got the capacity to deal with the Northern Ireland entries, and the new system that's required to do customs entries for Northern Ireland, Customs Declaration Service, is literally still being prepared and made ready for Northern Ireland, that they've sponsored the instigation of the Trader Support Service. And if your company does transport goods or move goods to Northern Ireland or sell goods to Northern Ireland, I strongly recommend you actually involve the Trader Support Service unless you already have done, because they will provide advice on the new arrangements for Northern Ireland, and they'll also arrange for the Customs Act declarations to be done too. And they won't be making a charge for the first 2 years. So this is something that the freight forwarding industry is very concerned about because of the lack of software readiness to prepare for Northern Ireland. But the Trader Support Service is putting together a solution, and they're expecting to be ready on the 1st of January. So if you're moving goods from Northern Ireland to the UK, you don't need customs declarations generally, unless you're using one of these customs specialised processes. So if you have a customs warehouse in Northern Ireland and moving goods under customs control to the UK, you will need to do an export declaration. But this is a fairly rarity in terms of our customers. Not too many customers use special procedures when they're moving goods to and from Northern Ireland. But that's just one of the things which was agreed last week, because it has been under contention until very recently. So what we have is this agreement in principle, and it's most important to look at the actual documents and read the documents when you hear about changes in policy. Anybody with the thoughts that listening to the news last week that the Northern Ireland situation had been resolved and we can now move forward, but the documentation which was published in draft form and using words like we need to work out the practicalities of making this work, and there's a lot of ambiguity, for example, in what's been agreed, and we do know that the parties are still discussing the finer technical aspects of how the movement of goods will work between the UK mainland and Northern Ireland. So, for example, what goods are at risk of going to the Republic? We've agreed that there will be something put in place, but the final wording has not been agreed between the UK and the European Union just yet. So what is proposed is that goods at risk, for example, goods which are likely to go to the Republic of Ireland from Northern Ireland, will be subject to customs duty. However, there will be special situations, particularly for retailers operating stores. We don't know what's going to happen about retailers who have got stores in the border areas such as Strabane, where they have a significant number of customers from the Irish Republic. But I think the hope is that they will be allowed special dispensation and they won't have to pay duty on their goods going into Northern Ireland. The get out clause is that in 2024, if the parties believe that it's not working and there's been a lot of diversion of trade, fraud or whatever, there is a get out clause in 2024 when presumably we'll think of a plan B, and this is called the emergency break. One bit of good news is for authorised traders such as supermarkets and their suppliers will basically benefit from a period of grace until the beginning of April, which means they won't need to declare their goods for the food aspects and for terms of food controls. They'll still need to do customs declarations, but we won't need to have food controls on their shipments until the beginning of April. However, the UK is required to keep the same standards as the EU during that period, which I don't envisage will be a problem at all. But that gives us a bit more time, because one thing that was clear is that the food supply industry for Northern Ireland would really, really struggle with the requirements of providing health certificates for all the food going to Northern Ireland. You might have heard the news that there's lots of consternation about chilled meat products such as sausages wouldn't be allowed to go from GB mainland to Northern Ireland. Again, for the first half of the year, that's going to be allowed until the parties come to some sort of alternative solution. And one good news for those people who are involved in the food supply chain is that the employment of vets, any vets that oversee the health documentation, they will be able to recruit reasonable costs of these vets from the government. And one of the big concerns, particularly in this day and age of COVID-19, is that medicines were to be subject to particular controls and have to follow EU regulations for goods going to Northern Ireland. This has also been put back. So during the course of next year, medicines are allowed to move freely to Northern Ireland with no additional controls. One of the things that's been really causing a big issue within the parcels carriers, the fast parcels carriers and courier operators moving goods to Northern Ireland, is the need to complete all the extra documentation. And I think the government has recognised that this is going to be really, really burdensome, and EU and the UK government has agreed to discuss this further. So I know that talking to one fast parcels carrier fairly recently, who may have 6,000 parcels per vehicle going to Northern Ireland from the mainland, each one requiring a safety and security declaration. Hopefully that's going to be put on ice for the time being. So one of the things to be quite concerned about as we head towards the new year is the Incoterms. And Incoterms are basically the official international rules for engaging with suppliers and carriers, so everybody knows who's responsible for what aspects of the supply chain. And traditionally in Europe, when you're exporting to Europe, you either sell ex works, that means that your buyer pays all the charges from your warehouse or factory to destination, or you sell DDP, where you're responsible for all the charges to destination. Just remember that with these Incoterms become new obligations on the part of the actual shippers and consignees. So if you're the seller and you're selling DDP to someone in the EU, for example, Germany, you're responsible for all charges, including the customs declaration at destination and paying duty. And in some regimes, and Germany is one of those, whereby they're expecting suppliers to actually pick up the VAT as well and account for the VAT. And in Germany, the customs authority there is expecting UK sellers to actually register for German VAT or have a fiscal representative to do that, which is quite sort of onerous. So what we're asking, suggesting to clients that do sell DDP, unless you are able to manage the VAT aspects at destination, do sell DDP, but sell DDP excluding VAT, and then ask your clients at destination to be the importer record and account for local VAT. Shouldn't be too much of an issue, particularly if the country in question uses postponed accounting for VAT. A bit more of an issue when VAT is due on imports and has to be physically paid out. But it will be a better system for you, which allows you sort of less responsibility at destination for the customs clearance charges. Likewise, next works buyer, if you're buying goods, just bear in mind that you're responsible for the customs declaration when you're at the origin as well. And again, do you want the responsibility of arranging your customs declaration at origin, when really the best thing is to get your supplier to do that for you? And when you're buying cargo, again, your DDP suppliers, it's nice to pass the buck to them to say, look, you are responsible for all charges to my door, including duty. However, just think of the consequences to your supplier. Is it going to put up their costs? Are those costs going to be redebited to you? Are you in a better position to do the UK customs declaration? So you may want to change your terms from DDP to DAP, delivered at place, which will make the operation slightly more smoother. And likewise, if you're the buyer and you're buying ex works, do persuade your supplier maybe to change the terms to FCA and allow them to do the actual customs declaration at origin. So just bear in mind about these obligations and make sure you've got some sort of written agreements with your partners to make sure that they actually comply with the requirements. And also do talk to your carriers as well to make sure that they are aware of their responsibilities. Just briefly, we've mentioned this before in the previous broadcast about consignments of a value over £135. You do need to have systems in place to record the VAT, because you're now responsible for accounting the VAT on your VAT return as opposed to paying as an import. And you do need to have a system in place to make sure you do that. And just a reminder about wood packing agreements, that all wooden cases, crates, pallets, etc., which are traded between the UK and the EU from the 1st of January will be required to conform with the wood packing regulations, which basically means dealing with heat-treated wood. Now, whether the authorities are going to take a hard line on this remains to be seen. I recently heard about one meeting between governments and a client, and the client was made was told to know in certain terms they had to comply. It's a legal obligation. I don't believe the UK will be imposing the regulation too harshly in the UK. I know one other customs authority in Europe has also said likewise, but given that it is a legal requirement, do be prepared that you may get goods stopped due to pallets not complying with the ISPN 15 regulations. So it is something to have on your radar, and if you're at all possible able to get these pallets and wood packing, etc., if you're using cases or crates, to make sure that they do comply with these new regulations. I thought we'd just walk through the new export process, new import process, just so you have a bit of a better idea of how international trade is going to move in the new world. So this is a relatively simple diagram which will give you the step-by-step approach on how arrangements will work, from the 1st of January next year. So at the moment, when you move cargo between Berlin or Madrid or Paris and the UK, or vice versa, it's a very simple operation. It's like moving goods between Birmingham and Leeds or Manchester and Glasgow. Very little controls at all. But this is all going to change from the 1st of January. So typical export process, and what you have to think about is allowing time for these various steps to take place. So a shipment moving from, say, the Netherlands to the UK or vice versa may take a day, 1.5 days. It may be necessary to actually increase that transit time by at least a day or possibly 2 days to allow these steps to actually to take place in good time. So when we receive a booking from a client, we look at an export process to start with. We will require certain new bits of information, such as a commercial invoice. And we'll come into a bit more information, detail about that later in terms of the detail required on that commercial invoice. But we do need sufficient information which will allow us to do a export customs declaration, which we need to transmit to customs and which will clear ideally before the goods leave your premises. And then we collect the goods and take them to a depot. If it's groupage or if it's a full load, it'll start heading towards the channel. And if the goods are going to clear inland somewhere within Europe, we need to complete a transit document. This is where the guarantee comes in to guarantee the duty and VAT. It may be at risk when the goods leave the UK. And we'll have an MRN number, so a unique reference number relating to the goods. And we need to declare that to a custom system called NCTS. And then the goods are on their way, and we complete the documentation called a CMR note, which we use now. It's nothing new because it's used for all European transits. And then we must advise our partner overseas about the goods coming in, which gives them good time to complete the import arrangements. Essentially, probably we would do that at the same time as we're doing the export declaration to give them as much time as possible to arrange for the import declaration to be done. And then we need to add some of the customs details to these new border systems. So in the UK, we've got this goods vehicle movement system. We don't necessarily need to use that for the first 6 months of next year, but there are similar European systems called SI Brexit in France, RX Seaport for Belgium, and Port Based in the Netherlands. The Irish have a system too. And this is to help control the movement of cargo through the ports and to make sure that some sort of customs regime covering the cargo. If the goods are moving via Kent, we need to then create a Kent access pass using your goods through the HGV system, or smart freight as it used to be called. And then when the driver arrives at the port, he needs to present his reference numbers and to make sure that he's actually got some customs paperwork with him and the goods are ready to move outside the UK. And then when the goods arrive in France, for example, he'll scan his SI Brexit number into the system, which will recognise the fact that there's hopefully either a French customs entry being done or a transit document which has been instigated, which allows the goods to move on to their point of clearance in the European Union, wherever that may be. So these are all important steps, and the documentation must be in place for the goods to proceed. And so long as they are in place, there's no reason at all why the vehicle should be delayed. So for the first week or two next year, we are expecting volumes to be quite low because people will just be wanting to see how the system works. Clearly, fresh fruits and vegetables and other such foods will be moving as normal. But for general cargo, we are expecting to be fairly quiet for the first week or two. But this should give people time to understand the system and how it's going to work in practice before business actually starts in earnest again. But it's most important that we get all these bits of documents done in good time. And you can see by the fact that we probably need to think about preparing the import customs declaration in Europe at more or less the same time as we're doing the export declaration in the UK, and the need to do that in a good timely way is important. So we shouldn't expect a documentation pack which you say receive on a Friday afternoon necessarily to be processed in time for a Monday delivery. So if we've got an export collection on a Friday and there's a delivery proposed on the Monday, it'd be really, really good to get that documentation sorted out on the Thursday to get the import declarations done in Europe in readiness for the arrival of the cargo on Monday. So probably receiving the documentation on Thursday, process the documentation by Friday, and delivery of the goods on Monday would be good, which does eliminate or reduce the need for weekend working. So that's roughly how the system is going to work for exports in a fairly simplified way. And if we look at the import process flow, this is the plan of attack. So the orders booked with our partner at origin, again, we need details to do the export declaration, EOI numbers, etc. Most important to have that for the carrier. And then the export customs declaration is completed. And quite often in Europe, we do an entry accompanying documents because European customs authorities like to know when goods have left the European Union, the collection and consolidation process, the documentation, the CMR notes, which is essentially the bill of lading for road freight, and again, potentially a transit document may be entered and declared if there's goods going to be, particularly if they're going to clear inland in the UK. And then we need to enter details into the port inventory systems, again, GVMS or SI Brexit, etc. The driver will have an MRN number, and then only with that will he be able to process himself through the port system in the EU before leaving on board his train or boat. And then we go through the, if it's a transit document in the UK, we need to use the GVMS system. And then once the goods arrive in the UK, because he's already been cleared to move through the port system, he's free to drive off the ferry and off to destination. Now, this will work pretty easily over the first 6 months of the arrangements because there's very little checks expected. But once the goods vehicle movement system is going to be used in earnest from the 1st of July, we do expect a bit more control and a bit more tightening of processes and procedures, with drivers really having to have customs paperwork in 100% tip-top form. So this is in a nutshell how the actual arrangement is going to work, which all look sensible. We have a few concerns, particularly with the goods vehicle movement service, where we have to declare vessels and trains and so on. And if there's any changes in the supply chain, there could be some challenges in terms of how we communicate to the drivers, but that's been discussed with customs at the moment. Now, when you're trading with Europe at the moment, you basically issue a sales invoice covering the value of the goods. And it's most important that, particularly when duty is concerned, you use the right invoice. And that sort of invoice we're looking for is the customs invoice, not necessarily the sales invoice, because what we need to know is the value of the goods that's been imported or exported. And that's not necessarily the same as the value that the goods have been sold for. So if you're selling a machine to Italy, for example, it may be that you're selling the physical machine itself and you're providing a service package, an installation package, and various other aspects that aren't related to the physical cost of the goods. So just for example, the machine costs £50,000 and you're providing £55,000 worth of service, support and installation. You don't need to declare that on your invoice because that's not subject to duty. So it is important to understand the physical price of the goods. Likewise, if you're moving your machine to Italy and you've required your client to pay you a deposit of £10,000 and you get your deposit, you issue an invoice for £10,000, and then when the goods are ready to move to Italy, you issue another invoice for £40,000 to cover the residue. One would be very worried if you presented an invoice for £40,000 at the time of export. We'd need a value of £50,000 to declare the true value to customs. So do bear that in mind, that when you're involved with the new customs arrangements needed for the EU. So essentially, we need the customs invoice, and we'll need that at the time the goods are shipped or when they're imported. Is to cover the value of the goods being shipped, irrespective of when payment's made. Even goods supplied free of charge, we will need an invoice which should cover the actual proper realistic value of the goods. So we can't deal with the goods with a value which is say zero, because the goods have been supplied free of charge. Also, we must bear in mind that there should be an audit trail between customs declaration and the flow of monies. And one of the top things that customers tend to look at when they come and do a customs audit, as you may know if you're dealing with third countries, is that they'll look at a customs entry, they'll look at the value of goods being declared, and they'll also want to see evidence potentially of the contract and for evidence of the actual payments made, which should actually correspond with the customs invoice. And of course, if you are charging extra for service or installation, that could be clearly identified on the invoice. Do include things like payment terms, Incoterms, so people know what the responsibilities are. And if you've got the customs tariff heading, the commodity code on the invoice, that's really, really useful. And having 10 digits would be ideal, although we only need 8 digits for the exports. 10 digits are usually required, or nearly always required, for imports. So 10-digit tariff heading is preferable. And do clearly state what the nature of the goods are, because when we do a customs declaration, we can't just put a trade name or a name that means an awful lot to the actual buyer or seller, but not an awful lot to a customs officer. So a plain English term would be very, very useful on the customs invoice. And one thing to bear in mind is origin, of course. I mentioned earlier on about goods being acquired from France, and the origin is important because if they do have a Chinese origin, clearly that needs to be declared to customs. We shouldn't presume the goods are coming from France, therefore they're French origin. So important considerations moving forward. We are aware that a lot of our customers have been contacted recently by carriers and by suppliers wanting to have deferment facilities because they are worried about customs duty and VAT. So if you're buying DDP and your carrier that's been used for these shipments is asking you for your duty deferment details and wants you to be authorised to use your duty deferment account, do ask some searching questions. They probably shouldn't be asking these questions because it's your supplier's responsibility to pay the duty, not you under a DDP contract. So do be aware of that. And we are finding a number of cases where people are hoping that people won't be noticing that the duty be paid on the wrong accounts. So do check your Incoterms. Review your Incoterms, make sure your company, your suppliers, your clients and your carriers can comply with requirements. We're getting inquiries every day and multiple inquiries every day from customers who have suddenly realised that they have new obligations from the 1st of January. We do believe there's an awful lot of people out there still not prepared for the changes, and that's not just our customers, it's suppliers, it's carriers too, because they haven't quite worked out the implications of the EU leaving the UK leaving the EU. Think about goods that you export to Portugal for processing, for example, or goods you're importing, processing them, then re-exporting them. It may well be beneficial to apply for inward processing or outward processing on such goods, which enables you to save the payments on duty on processing costs, particularly when you re-export those goods. So it's quite an important area because what you don't want to be doing is paying double duty. And think about classification at the moment, because there's no duty payable on European imports and exports, and there could be come the new year. It's important that your goods are properly classified, and it is the trader's responsibility to classify their goods when customs entry is actually involved. And of course, these are legal declarations. So that's the end of the presentation. We will be sending out a hard copy with links to some key government sites. If you want the definitive documents in terms of the rules and regulations and what the changes will mean, I do recommend the broader operating guide, which can be found by following this link. It's a good document to send you to sleep. It's about 270 pages long. For heaven's sake, don't read it from start to finish, but do use it as a reference guide. I tend to have it on my computer, and I just literally sort of look for keywords and search on keywords to find out the appropriate item for reference sake. It is subject to change, this document, as arrangements come clear. We were expecting a new version by now, but we do believe that the version 3 is not due in until sometime early next year. But it is the definitive guide. It takes you to other parts of legislation which deals with the new arrangements as the UK leaves the customs arrangements of the EU. I hope you found this presentation useful, and if you have any further questions, don't hesitate to make contact with us and we'll try our best. But do remember, there's not an awful lot of time left to put arrangements in place. I do implore you to speak to your suppliers and your carriers to make sure they're ready. Do make sure you've got standard operating procedures in place, and good luck for January. And I'll take this opportunity to wish you the rest of the good day and a happy Christmas as well, and all being well, a prosperous new year too. Goodbye.